What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie and Ben here today giving you the wrap-up of what's been happening over the week. Ben, how's your week been so far?
Yeah, good. Busy. I was off leave at this. I was off on leave at the start of the week, so first day was catching up with emails madly.
Yeah.
Bit of a mad dash, but I feel like I'm back in the swing of things already, which is good.
I feel like it's been so busy as well this week. So you've had a really difficult one to come back into after being so lovely and relaxed. You've got like millions of things happening because it's such a busy time of year, I think, as everyone's preparing for really the spring selling season. There's heaps going on in the market. And of course, at the moment, lots of events too. We're in peak event season as we kind of head towards the end of the year. And on Friday, we held our Commercial Finance Awards, being one of them, which was super exciting. The CFA's Commercial Finance Awards, which was run with the partnership of Judo Bank as principal partner, took place in Sydney. And that was a really fun event. It's actually the second year we've done the Commercial Finance Awards, which is separate to a lot of the residential broking ones that we do here on The Advisor. And it's really great to firstly network with loads of brokers that we typically might not talk to because they're not in the resi space. So development finance brokers, cash flow brokers, brokers that specialize in commercial and construction. And of course, you know, all the lenders and aggregators that go with it. Really great to see a group of people really focused on the commercial and asset finance space and be able to celebrate them in their own way with their own kind of peers. Because, of course, a lot of our Australian Broking Awards and Better Business Awards, although they do have finance categories, mostly residential. So it's nice that they get to hang out with their mates, basically, and a daytime awards as well. Always fun to do.
I think that's always appreciated by the attendees as well.
Yeah, although I did hear some grumbles because it's the first day of the Ashes. So people being like, do you know the award starts exactly when the cricket starts? So yeah. I think there were a couple of people watching the cricket under the tables as they were waiting for their awards to be announced. But, you know, you can't have everything. I should have known better than planning it on the first day of the Ashes. But there we go. But I feel like commercial's been the word on everyone's lips at the moment. We've had this week the Big Four banks presenting at the Senate Economics Committee review of the Big Four banks they do on an ongoing basis. And a lot of the CEOs of the majors were actually talking about the fact they're all focusing on business finance. Obviously, NAB, we know, one of the biggest lenders of business finance in Australia. I think they brand themselves as Australia's business bank, but ANZ, Westpac and CBA all focusing on business lending at the moment, really being like, this is where we want to be playing, where we want to be growing, because margins are higher, because there's lots of business sentiment coming back up again. And I think also just because, you know, they've been talking a lot about, well, tightening their belts in resi and kind of saying, what else can we be doing? We can be doing more in business finance, which are underserved. So it's been a really big topic of focus, not just this week, but over the last few months. And I think this is something that we've been talking about a lot as well on The Advisor. The November edition of the magazine, for example, which is out now, by the way, guys, had our elite broker ranking commercial in it, and it came with the broker's guide to commercial finance. So we've been just commercial.
This is our big time for commercial
finance. Yeah, there's like two peak times of the year, I think. Sort of November and then like just before the end of financial year. So like November and May are our two big months for SME and commercial finance. But I feel like we've just been talking about it nonstop. But talking about the ranking, really loving the Elite Broker ranking that we've been releasing. So we've already had the residential one. This month, November, it's the commercial ranking that we've released. You might have seen the magazine already. If you're a premium subscriber, you would have got it in the post. Otherwise, it's up online as well. And topping the overall commercial ranking this year was Simplicity Loans and Advisory Associate Director Joshua Diab, who, congratulations to Joshua, he settled a whopping $500 million in FY25 across only 109 loans. So wow. Really big volumes from him. He actually specializes in complex property and development transactions. And often, as you can kind of tell from those numbers, I think quite high profile deals, sometimes hundreds of millions of dollars. So things like shopping centers and major development projects. So congratulations goes to Joshua. And of course to all the winners actually at Friday's Commercial Finance Awards as well. And this award, this ranking has been partnered by asset line.
Yes,
So they were really super pumped as well to see so many great brokers coming out this year. This is the second time we've done this ranking and putting their numbers in. We have to go through all the verification checks and everything. It's quite like a cumbersome process. So thank you to the agile market intelligence team for helping us do all the verifications. But yeah, really great to see that. And another broker who has a really high number of loans this year is Son from Rethink Financing, who you did a podcast with not too long ago, Ben.
Yeah, I actually did one quite recently as part of our Winner Showcase podcast. And it was super interesting to sort of chat to him about his process and what he's sort of doing. He talked a lot about sort of how he's moved into a bit of a mentorship role recently, which was really interesting as well. But he did really well. He settled 493 commercial loans.
A huge amount.
FY25,
yeah.
which is very busy.
If you think about that, it's like, obviously more than a deal a day.
Yeah.
But like just doing these commercial loans as well, they typically take a lot longer than a resi loan, especially if they're a big development, they'll take a lot longer. So I think this is the thing that's interesting about the commercial ranking as well, is that we actually split it into two. So we did one overall one, but we then split two mini ones. So one which is commercial property and one which is cash flow loans. Because again, if you're writing just working capital, you can probably churn out quite a high number. Whereas if you're writing commercial mortgages or development loans, that's going to take a longer period. You're going to have fewer loans. So we split out some of those as well. And I think amongst those, we saw, for example, with working capital, fewer brokers writing these loans than we do see for commercial property, which I thought was quite interesting. And I wonder if that's going to tick up now that business sentiment is improving a bit and everyone's focusing on commercial. I wonder if we'll start seeing next year's ranking, for example, more brokers writing unsecured cash flow loans. But the ones that did submit, Brett Harwig, who's the CEO at Victorian-based brokerage BCP, wrote the most by value, settling 40 million in working capital cash flow loans over FY25. But William Hong from Talk to a Broker was actually the most prolific one because he settled 79 cash flow loans over the year. So really great to see these kind of different brokers that, as I say, we wouldn't necessarily always talk to for our residential awards. And special mention goes to Isabella Constantinou as well from Simplicity Loans and Advisory, who was the highest ranked female commercial broker this year and the only woman to make it into the top 10. So Simplicity really kind of doing big things in commercial. I think many brokers who are in this space will already know that. So it's great to see Joshua Diab taking out the overall spot, number one in the broker ranking, and Isabella taking out one of the top 10 places.
Yeah.
But I think all of these things, basically, when we talk about commercial, it's really looking at not just the volume of loans being written, whether that's number or dollar, but also like the customer outcome. So seeing how brokers are helping small businesses grow their businesses or buy the premises that they want to be in. And I think because of the big demand that we're seeing, not just from the third-party channel, but from the market generally, a lot of the lenders have been moving as well to really identify this and help serve these markets. You wrote a story, Ben, this week from research actually from Judo Bank as well, which looked specifically around what sort of SMEs were thinking and doing. What was that telling us?
Yeah, so this was some recent research from Judo about, and sort of was talking about consumer sentiment around SME owners. I think they surveyed 1,000 SME owners between 26th of September and 1st of October. And the Judo Bank research found 4 in 5, or 81%, said they felt their business was in either stable or strong health, which is a 7% jump in the number of businesses who reported that feeling earlier this year. I think there was a similar cut of data in February 2025. The Judo survey also showed almost 7 in 10 SME owners said they felt confident about being able to achieve business growth in the next year.
Hooray.
So yeah, I mean, it's good. I mean, we talk so much about property in terms of household owners, but SMEs also represent a huge sort of segment in terms of the health of the Australian economy and that kind of thing. So yeah, it's kind of good to see some signs of improving sentiment.
Yeah, and of course, like we know, I think the figure that gets bandied around a lot is something like 2 in 3 businesses in Australia are small or medium sized. They're not all giant corporates. So it's whether, people are thinking, I'm feeling more positive because my property value is going up or because the market, the interest rates have been coming down. So maybe mortgages are feeling a bit more affordable or loans are feeling a bit more affordable. I think also, the kind of whole uncertainty we had with tariffs at the beginning of the year has kind of stabilized. And generally, as we get into the warmer months and the sun is out, I think people are just feeling better in themselves. They're just like, it's a good time to be alive, good time to be in business.
Yeah.
Plus, we've got the busy holiday period coming up too. So I think lots of businesses ramping up for growth, preparing for growth right now, are really talking to brokers and lenders about how they can be actually growing their business. So it's great to hear that 80% feel like they're in a good place. And hopefully that means they'll be looking to grow and, turning to the services of this channel to help them.
Yeah, 100%. And, brokers are especially well placed to sort of help. A lot of brokers are small business owners themselves. So, they kind of get how the sector ticks.
Yeah, they can walk the walk and talk the talk because they've been through it themselves. They are small business owners. And I think this is why, again, it's so great to have the rankings of the most prolific brokers in the commercial space, because if small business owners are looking for a broker, they can be like, oh, there's a whole list of people for me to go and contact. But the lenders also, as we said, kind of looking at innovating and providing new products and kind of really jumping in this kind of good sentiment time to be like, what else can we be doing for small businesses? And we've seen a few small business lenders this week launch new products. I think ScotPac was one of them. Yeah,
so they've launched a new sort of working capital solution that allows businesses to borrow against multiple asset classes, such as inventory, property, equipment. And they said it's sort of a way to sort of the aim of the product is to sort of help this sort of mid-tier growing SME sort of business sort of seize opportunities for growth that may be outside sort of traditional banking practices.
Yeah, and I think it's interesting on for ScotPac because I think many people will know they've traditionally been an invoice finance lender. I mean, they've been expanding out their offering for the last few years. So they haven't just done debtor finance for a long time, but this is probably the first time we've seen them start doing multiple assets. So not just equipment loan sort of backed lending, but also, as you say, they're kind of different types of assets secured behind it. So good to see new products coming out from some of the lenders, good to see appetite from the majors as well, really ramping up. So I do expect that we'll see some more movement from them on either rate or on product, some tailoring in the next few months, if not year, from the major banks, I think, on trying to claw back some of this market share from the non-banks who have really dominated in this space. Because we know so many non-banks specialize in SME finance. We've got a whole bunch of them, like ScotPac, for example, Prospered, another one we talked to recently on the podcast. I think you were speaking to Roberto Sanz for that one. Again, saying sentiment improving, lots of things coming brokers' way to help them write more finance.
Yeah, and there's so many options on the market at the moment. So it's a good time to be writing finance for SMEs.
Well, it's a good time to be a broker, I think, full stop, because we have seen demand absolutely going gangbusters recently. And we'll talk about that just after this break. So I think last week, Will and I were talking about the fact that investor lending had hit new records. So we'd seen a surge in investor lending over the September quarter. That was coming from data from the Australian Bureau of Statistics. And in the past week since then, we've kind of been talking to lots of different people about all the other kinds of high demand at the moment. It's not just investors, although they're really, a high proportion of them taking out loans. First home buyers also going super strongly with things like the expanded guarantee scheme, with the spring selling season coming on as well. Downsizers and upsizers looking at being in market and trying to take advantage. House prices also rapidly increasing, both in the cities and in the regions. We had some data from Cotality this week looking at regional house prices that have accelerated at their fastest pace of growth, I think, for almost 3 years, because of a lack of supply and high demand. So all of these things, I think we've seen pretty much every single segment of the market booming. First home buyers booming, investors booming, commercial booming, SMSF booming. We've talked about that a lot recently too. But because of all of that, turnaround times really suffering. So we had a look at some of the Broker Pulse data from the most recent survey from Agile Market Intelligence. Now, if you don't know what Broker Pulse is, it's a monthly survey of brokers where they're asked about which lenders are you using, how are they doing? And then there's also an annual survey called the Third Party Lending Report, which kind of looks back over the year. But the Broker Pulse one is a little pulse check of being like, how are the lenders doing? And interestingly, for the October edition, which just come out, turnarounds across the board blowing out. And this is mostly to do with the fact that there's so much demand. There's so many people moving at the moment needing loans, whether that's for residential or for commercial. So I wrote a story which actually published yesterday about the data. And it's really showing that most of the loans now are kind of 5 business days, 6 business days, in some cases 7 business days before even getting to an initial credit decision, which in a fast-moving market, not great news.
No.
Really not great news. So we've been seeing a lot of people sort of saying, well, how am I meant to transact with confidence if I don't know whether or not this loan's being approved? And some of the comments from brokers, I think, really shocking. I don't know if you've had a look at this. Do you think 7 business days is a long time to wait?
For that kind of transaction, especially when you're sort of used to stuff moving a little bit swifter, it seems like a long time. Perhaps unsurprising as well, considering the influx of buyers in the market, but it is interesting.
So I think the Broker Pulse survey was saying that smaller banks in particular, the mutuals, the non-major banks, or at least the lesser commonly used ones, so excluding the big 4 plus Macquarie and some of the larger non-major banks, the smaller banks now taking an average of 7.6 business days to reach an initial credit decision. So that's business days, so almost 2 full working weeks before you even get a yes or no, too long. And that's up from 6.3 days the month before, or 5.5 days in August. And I think we had seen them tracking around 4 or 5 days. So let's say a working week to get an initial credit decision, but now blowing out beyond that. It's the longest time of all the different types of lenders that we're seeing is in that space, the smaller bank space. The last time it was higher than that was in May 2023. And at that point, it took 8.3 days for the smaller banks to reach an initial credit decision. So if you think back to May 2023, things were very, very different. We were in an increasing rate cycle. Currently, you're in a decreasing one. Rates were still pretty low, I think. Were they? May 23? Yeah, I think they were still about 4%-ish. So I think that's just really interesting to see that even though there's been all of this kind of demand side factor, we're still seeing problems with people not being able to service the amount of loans because so many people put loads of money into their technology, into their people to try and get rid of these sort of bottlenecks. But it's definitely happening. And they're not the only ones. Non-banks also experiencing longer wait times, with brokers telling Broker Pulse that on average they're taking 6.3 days. And the major banks, they've increased their times as well from, I think it was an average of 3.7 days in September to 4.6 days in October. So all of the different segments having longer wait times because it's just taking a lot longer to get through all this business.
Yep.
What sort of things have you seen, like from your sort of chats with lenders and with brokers recently, that you think might also be feeding into lenders taking a longer time to reach an initial credit decision?
It's interesting. Is it kind of considered as a bit of a stress test, I suppose? Well, one of the biggest things, I suppose, and the most obvious ones would be the launch of the expanded 5% deposit scheme. That's seen a huge influx of activity, I believe. We actually ran a story on Broker Daily, our sister publication, yesterday. Beyond Bank temporarily paused its acceptance of pre-approvals due to this sort of surge in application volumes. It's just for a temporary period, but and it had a correspondence to brokers that we saw that was saying it had this sort of temporary pause to sort of figure it out.
And I think this is so interesting. I mean, Beyond Bank's probably like, it's a blip, we do this all the time, and brokers will be super used to it as well, of lenders having to pause when there are peak times of stress of business coming in. So I think like it's sort of, for pre-approvals as well, some people might be like, that's nothing, but for a lot of people, that is important. And if you're trying to go onto the guarantee scheme, you've got a place, you can't give up that spot because they are so high in demand. So you're kind of like, I need to know, can I get this pre-approved? Can I proceed? Can I, with confidence, try and buy this property at auction or find this one property that does fall within the property price caps? And I want to be able to move quickly. So seeing some of the lenders now start being like, actually, we can't give you pre-approvals unless there's a contract of sale in place. That's going to cause some issues. But I think like the main thing that we were hearing from brokers in the Broker Pulse survey as well was saying it's not even the waits that's the problem, it's the lack of communication. So they're saying we can deal if we know it's going to be a week before we're going to get a decision, we can deal with that. It's actually when it's longer than that. So one broker who was responding said they had no communication at all and it took 2 weeks to reach a decision. While another one said they had to wait 7 weeks for a lender to issue conditions for a loan. that's 2 months.
Yes, it's quite a lot of time.
Too long. Yeah. So I think that's kind of, again, like one of the things that Agile was looking at, the Broker Pulse team was saying, it's not even about the weight. Like brokers are used to the ebbs and flows of lending. It's about how are you communicating with brokers when there is a weight. So at least with Beyond Bank, they did send a broker note saying this is happening.
Yeah, and they were upfront about it to their brokers too. So
yeah. And I think, generally most brokers are like, okay, cool. Yep. We'll find a solution somewhere else. But at least they were told. I think the issue is when it comes to poor communication or limited access to people to ask questions, about like what happens if something is in pipeline, or what happens if you do have a request for more information, like, do I go back to the beginning of the queue? I can't wait that long. So there's a lot of things going on here. At the moment, it's a perfect storm. So even though that's good news, there's heaps of business for brokers, it's actually about, can you even get it done in time before, hopefully, the holiday period?
Yeah.
So, of course, those have been the big things that we've been talking around on turnaround times. And again, this is super important because house prices are accelerating very quickly. We already talked about it in October. There was a record for house prices. We've just seen regional property data come out for the October quarter. And that saw also, again, as I said earlier, three-year high in the value of regional property prices going up. And again, brokers we've been talking about being like, doesn't matter where we are, people are just falling over themselves to get into market. So that's been pushing up the cost of housing. So lots to be excited about, but also lots to manage, lots of good client communication going in here. But because of all of this, again, lots of new products coming out and innovations coming out. And we've been seeing a few things changing this week, which we've been writing about on The Advisor. And we'll get into that just after this. So a big launch this week that got lots of brokers actually pretty excited was the new bridging loan product and solution from Athena Home Loans. Now, Athena Home Loans currently has partnerships with Loan Market Group and with Mortgage Choice, and they have white label agreements in place for a lot of their mortgages. But this was a new product that they had been building with the groups behind the scenes, apparently, for a lot of this year. And this week launched a bridging loan, which it seems has got really great traction, not just because obviously it's an interesting product, but because of the tool that comes with it. So I think a lot of brokers traditionally have kind of stepped away from writing bridging loan products because you kind of have to do quite a lot of work for not necessarily that much remuneration. So you're looking at, what does your situation look like if you buy a property before you sell the house that you've currently got? What does your loan situation look like if you sell your property first and then buy? What happens if you sell 2 properties and then are looking at getting a third one? There are so many different sort of scenarios they have to do the number crunching for that can put the borrower in different situations. So they really have to do a lot of legwork here. And traditionally that's not been simple. It kind of is really like you have to do servicing calcs for each of the different scenarios and probably on multiple different calculators with different lenders, because some people will do something, some people won't. But Athena were like, we've talked to brokers, we know it's an issue, but we know so many people want to move. Lots of people look at PropTrack or Domain or property listings portal and kind of go, I'm thinking about selling. They're looking at all the different price points in their neighborhood or seeing what can I get for my property and trying to make those decisions. But a lot of them don't actually do it. And I think they looked at PropTrack data and said 1.8 million people a year supposedly look at selling. 1 million of them don't do anything with it. And they were like, how do we help them move if they want to move? And how do we help brokers to do this? So they've come up with a new tool that lets a broker put in all their client data, look at, the property value they currently have, look at where they're wanting to buy. And I think that pulls on PropTrack data as well. And then go, here are 4 different comparisons of what their situation would be if they buy or sell first, if they sell and buy, if they buy them both, or if they don't do anything. So they can see things like what's their capital position, what's the LVR, what kind of loan size do they need. And this was something that Athena was saying they built in tandem with brokers. So they've been workshopping this for months, but they actually finally launched it this week. So it was really interesting to see that. Do you reckon something like that would be helpful from a broker and a borrower perspective?
Yeah, 100%. I think from the borrower's perspective, it's just sort of it's hard enough to find a property, let alone visualize what it's going to look like servicing that loan and paying off your mortgage, and then whether I should get a bridging loan, or do I have to sell my property to have enough money to buy this new property? So yeah, just having that little extra bit of clarity is good for the borrower, but it's also really good for the broker because it's probably one less thing for them to explain.
And less time. I think they were saying some brokers were like, this is going to save hours of time of me having to do all the number crunching and looking at what does their capital position look like if they do all these different things and which lenders do I have to use. So Athena, I think, will probably be pretty popular with mortgage choice and loan market brokers who currently that's the exclusive partnerships they have with them to use this, because they're like, finally, we've got a modeling tool that can help us easily identify what the different situations are, but also show our client that too, to be like, you can see it in black and white. They can save where they were in the process and be like, go and have a think about it. Because of course, moving house is a big thing, particularly if you've got young kids and you've got to move schools, if you're out of catchment areas. So it's big life decisions you've got to have. So they can actually be like, here is all the different scenarios of what your different loans options would look like, or your different equity positions will look like based on doing X, Y, or Z. So should be pretty popular. And I think generally they were sort of saying, not only are we doing this, we're also remunerating brokers pretty well for it. Because again, that's a big pain point for brokers, being like, we do so much work on this loan and then nothing ever kind of eventuates, or we only get paid for a little bit. So I think they were talking about, they're getting standard upfront and trail on the end debt portion, and are also compensated for both the peak debt, so the bridge period, and the end debt, sort of in recognition of the work. And generally, we just hope it makes both brokers and borrowers feel more confident in their decisions and make sure they know what is in their best interest, or at least is in the interest of what they want to achieve as a borrower. So really interesting to see that sort of innovation. I'm sure that's going to be popular with brokers, both in mortgage choice and LMG. So bridging loan, who knows? That might be the big thing of 2026.
Could be, yeah.
Could be absolutely. Just heaps of people moving and maybe freeing up some supply, which would be nice. Not the only product launch we've had though, or this week. You've already mentioned the Scott Pack one. The other things that we've been seeing, I think, have been brokers launching new things too. So I actually had a chat with Anthony Landau from Equilibria Finance, who's launched a private lending arm, which I was a bit like, why do this? Surely you're already pretty busy. But, never one to sort of sit on his hands. He was like, well, actually, there's been so much focus in the private lending landscape recently. I know, Ben, you've been doing heaps of content with private lenders, both for the magazine and for podcasts, looking at, well, what sort of solutions are out there? And he was saying so many brokers just don't know where to start when it comes to private lending. He's like, we've, as a brokerage, have used a lot of private lenders. We know what works and what doesn't. So we've actually white labeled a product from a funder here in Sydney to have our own private lending arm, so that brokers can refer deals over to us. We can get it approved within a day. I think they've got their own agreements in place. They're being like, we know that we're super transparent on fees and commissions and rates and everything. And it's just basically being like, we want it done right. So we just white labeled this product and we can help brokers do it. So I thought that was pretty interesting, seeing a broker move into kind of the lending space. But they're not alone. More brokers, I think, are starting to do this, particularly the bigger brokerages, the ones that are more established and have got really high yields. I think Shore Financial have a few white label products underneath them. I think maybe Smart Move might as well. And I think generally we're seeing brokerages kind of look at, well, how can I have another string to my bow, really, and provide another service. So it is a separate company at Equilibria. It's Equilibria Private, it's called. Obviously, private lending, it's all non-coded loans. They don't want to touch the NCCP stuff. But yeah, really interesting to chat to them about what they've been up to. And they've brought in Daniel James, who used to be at a private lender themselves, to actually manage this company. So lots of really interesting stuff happening in the broker space too. You talked to some private lenders this week, I think, as well. I think Aquamore had a podcast come out this week. What were you talking to Aquamore about?
So I talked to Matthew Porch from Aquamore, and it was really interesting to sort of get his perspective on the sector and how it's in many ways evolving. I guess it's sort of still an area where there's lots of different types of operators and with different levels of maturity and expertise and that kind of thing. But he was kind of talking about what works for Aquamore and what kind of business they're seeing and that kind of thing. So I really enjoyed that one.
Yeah, it's a good listen as well. Matthew's got the most beautiful Scottish accent.
Yes, yeah.
I feel like I could just listen to him talk all day. So if you enjoy a Scottish accent, I would recommend checking it out, not just for the content. Obviously, the content is sterling, but I think from the for the accent as well. It's a lovely sounding accent there. But I think, again, one of these things that we've been doing a lot of work here on The Advisor on private lending. There's been obviously a lot of focus on the regulators on private lending. And we're like, well, how do you know with confidence as a broker who to partner with? So it's great to hear from these private lenders about what they've been doing, how they're working with brokers, how they're hoping to make it more transparent, easy for them to understand what their solutions are, but also what it means for the end borrower. So making more transparent the things like the fees and the valuations. I think there's a lot of confusion sometimes around that too. So yeah, that's a really great podcast that I think Aquamore partnered with us for. So thanks for doing that one.
Yeah, no problem.
That's a lot of stuff that we've just talked about this week. And that was, as you say, a short week for you. So you've been hitting the ground running. What are you going to do this weekend to relax?
Decompressing. I
Yeah.
think, I've got a pretty low-key weekend planned. What about you?
Yeah. Same. Got some people coming over. I've already had my first Christmas party, if you can believe it. It was still in mid-November. But a lot of my friends are disappearing off different parts of the world and country for Christmas. So we've been having slowly sort of festive catch-ups with our mates. We've got some of them this weekend, and I think just recovering from the Commercial Finance Awards as well. But yes, for anyone else who's got any questions for us, do feel free to reach out. You can reach us at editor@theadvisor.com.au, and Ben Squires or Annie Kane, if you want to have a little search up us on LinkedIn, we're there, or on socials, we're there too. So yeah, do feel free to reach out if you've got any questions for us or want to tell us any stories that we can write about in the news. We're all ears. Ben, hope you have a good weekend. And for everyone else, hope you have a fab week. We'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.